Hello everyone, Ali here, broker with Remax Hallmark. First of all, I want to wish you all a happy new year. Hope you're all doing well and you're all healthy. And in this video, I want to do a recap as to what happened in the preceding year of 2021, as well as give you some insights on what you can expect in the upcoming year ahead. I'm sure you're thinking this and you've heard this many times before. 2021 was a year like no other, and it really was. Records were broken not just by agents, but certain communities and the Greater Toronto Real Estate Board. Here's a quick recap on how December went. The average price of all properties that sold across the Toronto Regional Real Estate Board came in at a whopping $1,157,000. That is up by approximately 24% over the previous year. Sales are down by 16% over the previous year, coming in at just over 6,000 properties that sold, and the average days on market to sell a property came in at 14 days, and that is also down by about 41% over the previous year. So how does 2021 compare to 2020 on an annual average? Well, I averaged out all of the monthly prices and they came in at just under $1.1 million. That is an 18% increase over the previous year, where the average price in 2020 was just around $929,000. Sales volume in 2021 soared by a whopping 28% over 2020. The year closed off with just over 121,000 transactions. That is an all-time high in TREB history. The last highest record was in 2016, when over 113,000 properties sold. So this is quite contrary to what everybody, including myself, was saying for this past year, that there's a shortage of supply. Well, kinda. Let me explain. Once the stats on that came in, my opinion changed a bit on the subject matter. In 2021, more properties sold than ever before in TREB history. Now, they sold really fast. Most properties sold within 7 days or just under a week on average in most regions. And the reason why they took that long is because most sellers and the realtors were holding back on offers so that all the buyers have an equal opportunity to see their property and submit an offer. If not for that, I think the days on market would be lower than what's actually reported. And let's not forget about all of the properties that sold exclusively, which means they were off the market, which were not reported through TREB. At the same time, we did have low inventory because there was a certain emergence of buyers that just came to market. It seemed like everybody and their uncle was interested in buying property. So demand increased drastically, however, supply did not meet that demand. And so therefore, we did have inventory shortages. If we compare December 2021 to the beginning of the year, there's double-digit growth for most properties in most regions. Take York region, for example. Townhomes on average went up by 31%, semi-detached properties by 27%, condos by 20%, and detached properties increased by 18% from the start to the end of the year. Now keep in mind that in dollar terms, an 18% increase for detached properties translates to more money than 31% for townhomes. That's because you're starting off at a higher price point. Now in Toronto, prices did increase as well within the year, although not as drastically as in the suburban areas, with the exception of condos that did go up by 18% within the year. And I'll get back to that in a moment. So why did the suburban markets see such a mass increase in property appreciation? Well, I've touched on this before in previous videos. It's because people started working at home a lot more. And it's because of the lockdowns and the pandemic and everything that transpired in the past 2 years. Taking that into consideration, as well as their lifestyles and maybe lifestyle changes that they wanted to make, they wanted more square footage inside the home, and they wanted also larger lots, so a bigger backyard and bigger front yard, and as well as more space between them and their neighbors, which you'll get in the suburbs, but not necessarily as much within the city. A quick stat on the employment sector: there's 7.7 million people employed in Ontario. Out of those 7.7 million, approximately 24% now work from home. Those are pretty staggering numbers, and that really explains why there's such a mass migration to the suburbs and to cottage life. Despite the mass migration to the suburbs, the GTA condo market made a massive bounce back this year. Of the properties that sold under that $1 million mark, 70% of those were accounted for by the condo market. Hence the double-digit growth, not just in Toronto, but in the surrounding suburbs as well. Which brings me to my next topic. Who is buying all of this real estate? Well, kudos to my brokerage, Remax Hallmark. They've done some research and they've been able to compile some data from various sources as to who the actual buyers are. The largest segment of buyers are multi-property owners, aka investors. They take up approximately 25% of all of the properties that come to market. The second largest segment of the market, which I was surprised by, and I'm sure you will be too, are first-time home buyers. They absorb approximately 21 to 23% of all properties that come to market. And that's because most are afraid of missing out on the market. In fact, 76% of renters fear that if they don't get into the market now, they will have missed the boat. And what's the easiest entry point for first-time home buyers? Condos. Hence, its resurrection in the past year. Just one last thought on first-time home buyers. The media has a certain way of portraying this segment of the market as being lost and forgotten and unable to get into the market. Well, obviously the stats say otherwise. They represent 1/5 of all buyers in the GTA market. So if you want to become a first-time home buyer, you're sitting on the sidelines and you're just waiting. Stop waiting. Stop listening to the media. They're telling their own story. The stats say otherwise. If you have good credit and you're ready to get in, you've got a stable job and a decent down payment, even with 5%, call your trusted real estate agent. And if you don't have one, give me a call. Let's sit down, grab a coffee, and I'll just explain to you how you can get into the market and start building capital and equity in your home to set you up for your future. Now, getting back to regular programming. In 2021, the rental market also went up by approximately 10%, if not more. And we're expecting rental rates to continue to rise by approximately the same in 2022. So going back to my first-time buyers thought, if you're renting and you want to get into the market, give me a call. Let's get you into the market so you can look forward to your future. So now that you know a bit more about what happened in 2021, here are my thoughts on 2022. The short of it, more of the same. The long of it, we'll start with interest rates. The Bank of Canada overnight lending rate was 0.25% for all of 2021. The cost of borrowing was super low, which as a consumer means that you can get variable rates at 1.5% in and around there, and fixed rates at just under 2%. It's just dirt cheap to get money these days. And so that essentially means buyers of properties can buy larger lots, larger homes, and perhaps even a second property. Moving on, we have inflation. Inflation historically has been hovering around 2 to 2.5% for the past 20 years. We hit a record high inflation rate hovering at roughly 4.5% for the past year of 2021. This means anything that you own or that you've purchased has gone up in price. Inflation just made everything more expensive. I will attempt to address interest and inflation at the same time. The cost of living has increased outside of real estate as well. When you factor in groceries, gas, utilities, insurance, everything's gone up. And when you factor in housing costs, it's just really expensive to live in a GTA and Ontario altogether. The government plans on combating inflation by increasing interest rates, and in fact, they're going to be making an announcement pretty soon. However, I don't think that their incremental increases to interest rates will make much of an impact on the real estate market. Here's why. An increase in the Bank of Canada overnight rate does not just impact mortgage rates and the real estate sector. It also impacts lending rates to the financial services industry, manufacturing, construction, as well as consumer goods, etc., etc. So the government has to be careful to not negatively impact any of those other sectors of the economy. So I don't think there's going to be a significant impact to the real estate market. There might be some weary buyers at first. However, I think everything will proceed as it has in the past little while. Now, what will impact our market and the nation at large is if truckers go on strike in their resistance to the vaccine mandates. This could have a really tremendously detrimental impact on our economy as it impacts supply chain across the board for all consumer goods, as well as capital goods and products that are required across the nation. With low supply, obviously that puts an upward pressure on prices, and prices of all goods and perhaps even services will go up. We experienced something similar to this last year with lumber, where the prices, there was a shortage, massive shortage, and prices just all of a sudden skyrocketed, where lumber was almost as good as gold. This can lead to labor shortages by those sectors that are impacted by the trucking industry. And ultimately, it just means higher inflation, which means higher cost of living across Ontario and the country. So I really do hope that the government can come to some resolution with the truckers so that they can continue to do the job we very much rely on and is a very integral and important part of our economy and our nation. So moving on from there, immigration is up. It will continue to be up. In fact, reports say that the government is processing approximately 40,000 applications per month. So with immigration being up and it continuing that way, you can expect to see a lot more competition in the market, because these new immigrants generally go to the metropolitan cities, and that includes Toronto, Vancouver, as well as Montreal, and perhaps drizzle down into Calgary and some of the other smaller cities. But Toronto will certainly see the bulk of these new immigrants, which means more competition for buyers and likely upward pressure on prices. Circling back to government policies, we had an election last year and the Trudeau Liberals won by a small margin. However, we haven't seen many of their policies implemented yet. We are looking forward to a provincial election coming up, and I certainly think that real estate will be on the docket, and there will be some policies that they will want to implement in order to curb the market a bit and make it more favorable for buyers to get in. Perhaps there will be more stringent policies towards multi-property owners in terms of mortgage qualification rules, perhaps more taxes, or even a province-wide vacant property tax. We'll certainly see in the months to come. However, this leads me to my next and final point: development. That is the root of all of our issues, in my humble opinion. So the government can impose all sorts of new taxes, lending policies, make it more difficult. Interest rates can curb some buyers, but in the long term, if we don't have more supply, it will not impact prices. Now, where does the inventory come from? Well, when somebody's selling a property and they're looking to move into another property, that equals each other out. You're not creating more supply. And when investors are buying up a lot of the supply, representing 25% of the market, they're making less inventory available to first-time home buyers. So the supply really comes from new housing developments, whether it be condos or low-rise. That is where the supply is coming from. And when the government makes it difficult or expensive for developers and builders to develop these lands and construct homes, we are losing out on supply. We are making it more expensive. We need more development in the city and the surrounding areas. If you actually go on Google Maps and you zoom out, you'll see a lot of green space that can be developed. And a lot of builders and developers have hundreds and thousands of acres of land that they're just sitting on. And they're sitting on them for years and decades until they want to build. Now, instead of a vacant home tax, why doesn't the government propose a vacant land tax? Either incentivize them to build or penalize them for not building. And I think most builders will prefer being incentivized to build those lands because they will make profit. And in turn, the rest of us will have more properties to choose from. And when you have more supply, it'll alleviate the tremendous amount of demand and stabilize the prices in our markets. And so, to finalize and conclude everything, if in 2022 the truckers do not go on strike, I think the market will be much the same, and we'll see approximately a 15% appreciation in property prices, although I don't think we will sell as many homes as we did in the previous year. If you have any questions, or you're a buyer or a seller that wants to take advantage of this market, give me a call, let's sit down and we can strategize. Please subscribe, like, and leave a comment if you have any questions. And if you don't get my newsletter, which you should be, go to my website, sellwithali.com, and subscribe for my newsletter at the bottom of the site. Until next time, take care of yourselves.